If you've ever tried to get your client's Stripe, Square, or PayPal transactions into QuickBooks or Xero, you've probably pulled your hair out a few times trying to get the income and fees recorded correctly so the deposit amounts match the bank statement. Did you know you could be using Cinder to automatically do this for you? Stay tuned to hear more from our sponsor, Cinder, later in this episode. So it did. I think I predicted last week. I was like, "Oh, they're just going to change the date right before the weekend starts," but they didn't.
They did not, and we have confirmation now. The Treasury Department and the IRS have said they are not going to extend tax day a second time. So there's no getting around it.
This episode of the Cloud Accounting Podcast is sponsored by ClockShark. Back in October of 2013, I became ClockShark's first Twitter follower. Today, ClockShark has grown to a highly rated and very much loved time tracking app that is now used by over 5,000 small businesses globally. With features like crew tracking, scheduling, overtime notifications, routes, geofencing locations, job costing, budgeting, and reporting, ClockShark has built a robust mobile time tracking app to handle the unique challenges that face your mobile workforce clients. Their technology has been helpful as their clients work through the COVID-19 pandemic. Your clients will need accurate records of their expenses and losses, and technology like ClockShark helps. With ClockShark, your clients can keep accurate records like paid time off and other important data to provide the necessary proof for CARES and FFCRA Act benefits. This lets them get straight back to work without too much disruption after the pandemic has passed. ClockShark's standard plan is just $6 a month per employee. Head over to cloudaccountingpodcast.promo/ClockShark. That is cloudaccountingpodcast.promo/CLOCKSHRK. This episode of the Cloud Accounting Podcast is sponsored by BQE Core. As firms everywhere are positioning themselves to work remotely, BQE Software is committed to supporting you and your employees during this critical time. BQE's core products operate 100% on a native cloud platform that's uniquely able to help you in your efforts to embrace remote work while maintaining your productivity. In response to the impact that COVID-19 has had on your firm and your clients' businesses, the team at BQE has let us know that the Cloud Accounting Podcast listeners will now receive 3 months of BQE Core for free with an annual subscription package purchased on or before September 30th, 2020. To learn more, head over to cloudaccountingpodcast.promo/core. That is cloudaccountingpodcast.promo/CORE.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
How was your 4th of July, David?
Hot. It's very, very, very hot. Did last night go to the one hotel and met somebody for drinks. The hotel was at 50% capacity. And you had to serve yourself. You had to go and get drinks from the bar and you had to bus your own table. But there was nobody around us for 30 feet. So it's if I would have known, I would have got a room at the hotel and just stayed there the whole weekend.
What did you call it? The one hotel?
Oh, no. We went to a hotel.
Oh, to a hotel. Got it.
To a hotel. Yeah.
I'm in my new place in Scottsdale. And I found out on 4th of July that Westworld, which is the events space in North Scottsdale where they have horse shows and stuff, was doing fireworks. And we were able to watch the fireworks from our house. It was really,
nice.
Really cool. Yeah.
You didn't have to
go anywhere.
Property.
And it's a good thing we could watch them from inside because it was like 110 degrees. So it was really nice to just kind of decompress and not look at my email for a day. But I kept thinking about all of our friends in the tax world who are struggling because they didn't get to take a 3-day weekend because the tax deadline is now on the 15th, July 15th. I've got some discussion about the AICPA and their reasoning for not advocating to move the July 15th date after previously saying it should be October 15th. The logic there is a little bit interesting. We'll talk about that. I've got follow-up on Wirecard, the Ernst Young audit that apparently did not detect $2 billion in money that was missing.
Got some Wirecard as well.
IRS news, appropriate for tax day coming up. The IRS is struggling right now due to coronavirus and just lack of funding. And PPP, of course, is still in the news. That got extended. That's what I've got on my plate. How about you?
Similar stuff. I got Wirecard in here. I got PPP, the IRS, and the lack of audits.
Oh, yeah.
It's happening. Some of that. There's a couple tiebacks to some old things. So remember we were talking about cash, right? And the acceptance of cash. Mm-hmm. Well, that's resurfacing again because now, with COVID, now businesses are kind of like, hey, even more reasons not to take cash. And so the bills that force you to take cash are coming up.
And we got some reviews.
We did get reviews. Want me to read the first one?
Yeah, go for it.
All right. So this review was on Podchaser. This is from Joel at RN, which I'm assuming is Joel at Right Networks. And this is a 5-star review. I've become a regular listener and enjoy the consolidated reporting and analysis of the news and events in the accounting industry. But I was compelled to write this review because Blake's take on the industry's recent words about racial reform and equity in the last episode really landed for me. We need to move beyond just words and committees with recommendations to tangible plans with metrics and performance incentives which drive actual measurable change. It will take time, but we'll have an opportunity to begin now. Great work, Blake and David. Joel.
Oh, thank you, Joel. This is our second review. The Cloud Accounting Podcast is my number one source for current real-world information and ideas on the leading edge of new and evolving accounting profession. Blake and David provide hands-on practical insights with every edition. Informative, entertaining, educational, humorous, authentic, sobering, witty, insightful, their pragmatic perspectives cut through all the technical and theoretical minutia and all the marketing noise and hyperbole. It's easy and free to subscribe. I listen at my convenience and can't wait for each post. CAP is a must for all accounting professionals who want to stay current on the rapid pace of change at the intersection of the cloud and accounting. Thank you, Blake and David, for this invaluable and unique resource. You've helped me and my firm in our journey to the future of cloud accounting and CFO advisory services. So that's Ronaldo Arellano. He's a CPA, PFS, and CGMA. Thank you, Ronaldo.
Yeah, I mean, that's what we try to do, right? He's talking about, like, we're just plowing through the minutia and all the noise that's out there and try to, like, bring what's valuable, right?
Yeah.
And sift through it.
So let's talk about tax day. It's coming up, right?
So it did. I think I predicted last week. I was like, "Oh, they're just going to change the date right before the weekend starts," but they didn't.
They did not, and we have confirmation now. The Treasury Department and the IRS have said they are not going to extend tax day a second time. So there's no getting around it. July 15th is the deadline, although of course you can still extend to October 15th. And the AICPA decided, somewhat controversially, not to advocate to extend the tax deadline any longer, which is interesting because back in March, during the whole coronavirus spin up, the AICPA did advocate to move the deadline to October 15th. And they put out a couple of blog posts about their reasoning. They did a survey, apparently, at the end of May, and I never got this survey. I don't know who they surveyed, or it's not really clear to me. And they didn't release the specific details of the survey, but they...
You mean like how many people who responded to it or took it? Did they release that type of a number?
It just says survey deployed at the end of May that asked members 2 questions. Number 1, based on the current COVID-19 environment and the impact on your tax practice, do you anticipate being able to file returns or extensions for your clients by the July 15th deadline? And the second question is, do you believe the IRS should automatically extend the July 15th filing and payment deadline? And they received over 1,000 comments. Doesn't say if that's 1,000 people who took the survey. Don't know. Like I said, I didn't get the survey. At least I didn't see it. But what's interesting is that although the majority of respondents said they would be able to file returns or extensions on behalf of their clients by the July 15th due date, a plurality of members wanted the IRS to move the July 15th due date to October 15th. Some members suggested other dates. So plurality means it wasn't a majority, but the greatest percentage of respondents wanted the deadline moved. But the AICPA tax committee decided not to recommend that. And there's some reasons for, some against.
So just to summarize, so most people were saying, yeah, let's move it.
The largest, a plurality, right? The largest group said, let's move it. And then the tax committee decided not to make that recommendation and listed their reasoning. There's a tweet from Logan Graff CPA. He's at Logan Graff Tax, and he highlighted the reasons that the AICPA gave for moving it and then for not moving it. And he said that most of the reasons for not changing the deadline were stuff like our clients are going to procrastinate. We don't want these tax returns hanging over our head all year. Some clients wait until the last minute. Changing the due date is confusing for clients. And he says, well, those are things that we can control, right? We can explain to our clients what they need to do. And we can, manage our work, right? And then he highlights the reasons for moving the deadline, which is Stuff like half the staff are teaching their children and working at the same time. Fear of the illness on my part, as well as my family and clients, has made the process much longer and not as efficient. There are investment reports, K1s, and revised 1099s that are not available. So he highlights those and he says, well, those are not things that we can't control. So why are we not advocating to move the deadline? Because, it's a lot of things that are out of our control, especially having kids at home. Like that's, how do you do tax season from your home office when you got like your whole family there? There
could be a reason to not move the deadline because like kids are not going back to school. Apparently, it's starting to be very clear about this, which means it's not going to be any better doing taxes in October than it is doing in taxes in July.
So this wasn't actually, I don't think this was listed in the blog post about the reasoning for not moving the deadline, but I did hear some speculation that the big reason managing partners wouldn't want to move the deadline is that they collect payment from clients when they file returns. So if they don't file the returns, if the deadline doesn't stick and it gets extended again, then clients aren't going to turn in their paperwork and the firm is not going to be able to collect the cash. So it's a cash flow problem. But that's based on the way they're billing their clients.
So this is a revenue play and it's not I can kind of see one argument of not moving it, and they obviously talk about that in the article I saw. The AICPA's vice president of taxation, Edward Carl, he said that it's the realities of COVID's uncertainty, and I kind of buy into that a little bit because if let's just say there's another crazy version of PPP that comes out 3 months from now because COVID's still not going away, right? This will just never end. It's almost like, okay, just rip the Band-Aid off. Let's try to get taxes done on this deadline. If you can't, extend the people that need to be extended because chances are, I don't know, it's probably not even chances, it's probably very high possibility accounts are going to be busy with a bunch of headache COVID-related stimulus work again. If it's not the forgiveness stuff, it's going to be some new things.
So let's talk about Wirecard. Some interesting developments this week. Wirecard filed for insolvency, the German equivalent of bankruptcy, last week or the week before that. And now prosecutors, police officers are searching their offices. I don't think they're trying to find the $2 billion. I think we're kind of realizing that didn't ever exist. They're trying to find a trail. And in particular, one challenge is that Wirecard's COO, Jan Marsalek, has disappeared. He is on the lam. He stopped responding to messages from colleagues when the company ran into trouble around June 18th, on the day that Wirecard revealed that $2 billion was missing. This guy, Jan Marsalek, is 40 years old, and he joined the company at age 20 as a payment systems project manager and ended up basically running a huge chunk of the company. Now, we're not sure exactly where he is, but immigration records in the Philippines cropped up that appeared to show him entering the country on June 23rd and then departing the following day for China. But the Philippines Justice Secretary said that those were faked records and he didn't actually enter the country. And
kind of like the bank statements were faked.
Yeah. So a theory is that Marsalek had these immigration records entered to figure out if there was an international warrant out for his arrest, an Interpol arrest warrant, so that he could then know wherever else he's going, if he'll be safe. And apparently he is. He's somewhere safe because he texted a friend on the encrypted messaging app Telegram saying that he's now in a safe place. Nobody knows where that is. So some kind of spy drama going on with Wirecard there.
They're going to catch up to him, right?
I don't know. I mean, so there's a question as to whether the $2 billion ever existed, but maybe some of it did exist. And this guy, has it squirreled away somewhere. He's also big in the cryptocurrency world. So maybe he's got like crypto that he can live off of. Maybe he's got another identity.
Or he's moved some of the money into cryptos. Yeah.
So
as a shelter.
So while the police are searching for Jan Marsalek, the spotlight is on Ernst Young now as the auditor that signed off on Wirecard's financial statements for 3 years before this was finally revealed. They gave Wirecard an unqualified audit for years 2016 through 2019 while these accounts were supposed to exist. And it's kind of interesting. We talked a little bit last episode about exactly what happened here, and we have a little bit more information about that now. So the $2 billion, right? It was supposed to be in the Philippines, but not in normal bank accounts. Apparently, these are trustee-controlled accounts. It's because this is part of a business where Wirecard used third-party partners to process payments for it in markets where it didn't have licenses to process payments. And so Wirecard's revenue from those businesses would be deposited in trust accounts rather than paid straight to Wirecard. And the rationale for that, according to Wirecard in past years, was that the money had to be kept in trustee accounts as a form of risk management. The cash would be available to provide refunds and chargebacks to customers for things such as canceled airline tickets or disputed charges. But what got weird about that is that the amount in those accounts became so large. It's equivalent to more than a quarter of the total group revenue for Wirecard in the years 2016 through 2019. A quarter of all of their revenue.
This is starting to see, somebody figured out like a way to pretend that money was there and they were pulling it out.
So maybe it started small, right? And then it just sort of ballooned over time because the amount is just way too big from a risk management perspective. Like, it doesn't make sense. There's no way they would ever have that many chargebacks. And so it's...
But I mean, that's what happened with the Michael Mann and My Payroll HR.
Right.
That went on, right? It would start at small. Then eventually it was like, I just got to move the entire payroll to my own bank account.
So
or the entire run.
Ernst Young has said, this isn't our fault, that this was like a sophisticated fraud that many people at Wirecard participated in. Well, this is like pretty simple because it was KPMG that came in to do a special audit after investors raised concerns. And, they figured it out pretty quickly, right? Because they did the bank confirmations and then the bank said, we don't actually have any accounts for Wirecard. So I'm thinking maybe this started small and then it kind of spiraled. And the thing is, that's damning for Ernst Young is that there's emails that the Wall Street Journal says it saw that say that the auditor had questions about this arrangement as early as 2016. So they were asking questions, but they never got to the bottom of it.
Well, and I have an article where the German regulator, BaFin, capital B, capital F, whistleblowers reported to them. And so there was oversight failure. So I think there's a lot more going on than just these two bank accounts, possibly. We're going to find out as it goes. And then EY, they got added to a class action lawsuit against Wirecard on Tuesday. But essentially, this article does talk about how this is really a systemic problem. BaFin has already come under fire after it took more than a year to report Wirecard for suspected market manipulation following a tip-off from a whistleblower about irregularities at the payments company. BaFin's chief, Felix Hufeld, issued an apology saying that it would share responsibility for the quote-unquote complete disaster at Wirecard because it didn't do a good enough job as a regulator. Isn't that their only job and role? If a whistleblower alerts them of an irregularity, as a regulator, you're supposed to investigate irregularities. And it's there's just a lot of finger pointing going on.
Well, and I've read stories about how they did the opposite, where there would be these investors complaining that it doesn't add up. And then the regulator, BaFin, whatever they're called, they would go after the investors instead of Wirecard.
In the UK, so they have the Financial Reporting Council, and a bunch of former partners from the big four firms sit on the committees at that council. And so it's the same problems we're seeing. The governing boards and these regulators are made up of people who used to work for those firms.
Right.
And why are those firms going to go after their buddies?
Yeah. No, that makes sense.
Especially if they might get a job there 3 years from now again as a partner or something. So the whole thing is just there's a lot of finger pointing going on. And I think this Wirecard thing is going to be a much bigger fraud than just these two accounts. It's starting to shape up that way. This episode of the Cloud Accounting Podcast is sponsored by Cinder. If you've ever tried to get your client's Stripe, Square, or PayPal transactions into QuickBooks or Xero, you've probably pulled your hair out a few times trying to get the income and fees recorded correctly so the deposit amounts match the bank statement so you can reconcile. Cinder automatically and accurately categorizes and posts these transactions into the accounting system. Cinder can sync all the necessary details like inventory items, tax, shipping, discounts, classes, locations. It even correctly handles the processor fees. With tools like duplicate detector and rollback functions, you can rest assured your client's books will never get messed up because you can undo and restore any sync data with literally one click. If you need support from Cinder, they offer free help using your favorite means of communication, be it chat, email, or phone. Try out Cinder for free. Head over to cloudaccountingpodcast.promo/Cinder. That is cloudaccountingpodcast.promo/SYNDER. Cinder, Smart Finance Management for Online Businesses.
So it wasn't just the German entity that had problems. The Wirecard has a US and a UK entity. Now, the US entity is pretty much separate and just sharing the name. They don't really do the same thing the Wirecard does in Germany. So they're actually okay. They're looking for a buyer right now. The UK entity, very similar situation, although because of the problems in Germany, the UK regulators shut down Wirecard in the UK from like Friday to Monday. And Wirecard in the UK processes payments for a bunch of fintechs. So it actually stopped people from being able to access their money at these challenger banks such as Curve, Pocket, and Anna, ANNA. These are apps that are banks basically, totally shut off. Now, most of these customers don't use it as their main bank account. It's a good reason not to. The regulation is very different. And so there are calls now, or there's been some folks have been calling for more regulation of payment processors, similar to banks.
And so you're talking about the tech companies, right? So SoftBank, so this is the investors, this is the people that invested in WeWork, and we've talked about the other flopped investments they've been having, right? They've been having a lot of problems, massive investments, right? So they actually they struck $1 billion investment deal with Wirecard.
Oh, when was that?
In April of 2019. And now SoftBank wants out. But essentially, a part of that deal, the agreement was for Wirecard to become affiliated as the digital payments provider for all the companies in SoftBank's base of tech firms.
I feel like...
And for SoftBank to help Wirecard expand in Japan and South Korea.
Wow. I feel like SoftBank is just going to end up collapsing, right? Like they've made so many of these terrible investments. Yeah,
they're really tied with just so many questionable deals at this point. And now they're trying to separate themselves from this.
Right.
It continues on.
So we talk about the challenges the IRS is facing.
Yeah.
The coronavirus has created massive problems for the IRS because so much of what they do is still in the office. It's not in the cloud. And particularly mail, right? Opening mail is something that has to be done in close quarters generally, and you can't do it when you're at home.
I think we talked about that a couple episodes ago. Yeah.
So that's actually been one of the big problems with audits. Corporate audits fell 71% this spring compared with the same time period a year ago. This is a story in Accounting Today. And it turns out that part of the problem isn't just, people working at home. It's that a lot of this correspondence for audits is done via mail. And so all of the audits got paused that could be. The only audits that went forward were those where the statute of limitations would make them unable to recover any funds. So, they're going to have a lot of catch up to do. But the problem is they're not very well funded. The IRS has been facing budget cuts for a long time, and they seem to have a problem with talent. There's another story this week. The headline is IRS wasting millions on audits with no results. This is another watchdog report. The Treasury Inspector General for Tax Administration said in a report released on Thursday that almost half of the audits on large companies from fiscal years 2016 through 2018 resulted in the IRS concluding that no additional tax was due. In other words, they wasted almost $23 million auditing tax returns that resulted in no additional revenue for the federal government. And they also,
of course, you know why, right?
What was that?
Basically, if you have income of $1 million or more, there's less than a 1% chance you'll get audited, right? The IRS will call you.
Yeah. Well, that's on the individual side.
Individuals. But see, so in total, the IRS has audited about 0.15% of individual returns in 2018. But people who claimed earned income tax credit, which basically is low income earners, those are getting audited at
0.6%.
0.6%, so 4 times greater.
Yeah.
And that's why, so if they audit those ones, because they're kind of easy, they're just there's no return there except for the income tax credit.
Right.
They're easy to audit, but it's not going to produce any revenue unless, somebody was fraudulent at that. Yeah.
Right. Yeah. It produces revenue if somebody's claiming it wrongly, because then you can claw it back.
But, and what is that? $2,400? What's that? $6,200?
I think the point you make is valid, which is that it's easy. And these corporate audits are hard. And clearly the IRS is not doing a very good job of choosing which companies to audit.
Well, as it goes up, right?
Yeah.
As the the higher the return goes up, the less chance it gets audited.
The less chance it gets audited, and the less chance there is a tax due. And I think it's because the returns are complex. So the IRS, has been losing talented people and not replacing them. So they don't have the expertise to audit those complex returns and to argue with the talented people who are on the other side, who are representing the taxpayers.
The other problem is they're doing more returns than ever. So in 2010, they received 230 million returns, and they employed almost 14,000 agents. Now, in 2019, they had 253 million returns. So you're talking 30 million more returns, and now they're at about 8,500 agents.
Wow.
So so this gets funded. I don't know. And again, I think we talked about this in the show. Like, this is your profit center. Like, you would double down on this if this was a business. Yeah. You would double down on your profit, your revenue producing agency.
Yeah, I think the number that you mentioned at the beginning of that story is, we just got to mention it again. If you earn between $1 million and $5 million, your chance of getting audited for tax year 2018 was 0.05%. So 0.20%. That's amazing. And if you earned over $10 million, then it's 0.03%.
But there's good news, right? So we talked about the earned income tax credit. We've talked about racism in taxes and things like this. So the IRS chief, he's IRS Commissioner Charles Rettig, said Tuesday that he would work with Congress now to examine any ways that the tax code contributes to racial wealth disparities. There's no actual data in that statement. He did say that he's a huge proponent of inclusiveness and diversity. He goes on to say, I think you're possibly aware of the fact that I'm the first commissioner whose spouse came from a country as a refugee, and I understand how people are treated in different arenas, and we're all in. Firstly, there's no other than him committing to doing it, there's not a lot what he's going to do. He's committing to do it, which is good. The fact that somebody's actually saying they're going to go look at it and try to work with Congress about this is the first step. I mean, they could start with the earned income credit, I guess. That would be the easiest thing to start with. So
let's talk about the PPP. The PPP, Paycheck Protection Program, has been extended. The Senate passed an extension along with the House. The president signed it, and the new deadline is August 8th. There is still $130 billion in funding left. So hopefully folks will get it together in the month of July and take advantage of that. We have some details from the SBA on what's happened so far. So far, we've had 4.8 million loans totaling $520.6 billion as of Tuesday night. And there are $669 billion allocated to the program.
And what's left now? Is it 103?
130 billion.
130 billion still left.
Now, there's $130 billion left in the PPP. You want to take a gander at how much fraud there's been so far? The Government Accountability Office released a report saying that the PPP almost certainly fell victim to a significant amount of fraud. Now, they didn't say exactly how much, but Entrepreneur talked to the CEO of risk management firm ClearForce, who told them that his company estimates there's been over $1 billion of verified criminal fraud within the PPP program. The Government Accountability Office, for its part, said in the report, quote, because of the number of loans approved, the speed with which they were processed, and the limited safeguards, there is a significant risk that some fraudulent or inflated applications were approved, unquote.
But there's no data. Like, what's the real number, like, from a percentages?
Well, so
this is a lot of money that went out the door.
Yeah. Let's say it is
fraud's a couple $100 million. Like, I think maybe that's acceptable.
A lot of money, but in the big scheme of things, I think I agree with you, David. Not material or worthwhile cost of doing business in order to get the money out. Like you said, you actually said at the beginning of this whole PPP program that one of the lessons we learned from the last recession, the Great Recession,
2008 recession, it was the Great Recession. I think they called that one. The lesson learned is they didn't get the money out fast enough.
Right,
is what they learned in that, and so. You have to take the risk that you're going to send checks to dead people. You're going to have businesses that apply for a loan that shouldn't have applied for it.
You mentioned the stimulus checks to dead people. So I just had to bring up this little tidbit from this week. Gene Dodaro, the Comptroller General of the U.S. Government Accountability Office, the GAO, which is releasing all of these reports, the one we just talked about, he told a congressional panel on Friday that the IRS sent his mother a $1,200 payment this spring, even though she died in February of 2018. Doesn't look good for the IRS, right?
He should just file it, claim it as taxes. He won't get audited.
So he sent it back like he should, but he's worried that a lot of people will cash the checks and don't know that they should send them back. So that's all I've got this week.
Yeah, I think the only other one is the Billy Ann Grigg wrote up an article on Accounting Web about what should business owners do after they run out of PPP loan money. And so she has some tips in here on things they should do, like do an expense analysis, determine an income target, right? Build a multi-layer contingency plan, build a strong cash position. But the whole time I'm reading this, I'm just kind of thinking, this is probably good if you have a brand new client that just came through your door and said, hey, I got the PPP loan on my own, and now I spent the whole thing. Now what do I do? Right? If they're a brand new client. But if you've already had this client and you helped them get the loan, like you should have done these things with that client ahead of time. Like waiting till the PPP money's out to build their cash flow and their future plans just seems a little bit ridiculous. And it's not that the article's ridiculous. It's just that's what I was thinking when I was reading it was like, hopefully you've done this already.
Well, yeah, I guess a lot of times this stuff doesn't happen until it becomes necessary. Clients have to want it. And in the good times, it's hard to convince clients to pay for this kind of stuff because their business is working. Everything's working. And it's not until it breaks that, they really need your help.
And maybe at that time, their focus and eyes were just like, I just need that PPP money because, hey, COVID's going to be gone soon.
Yeah,
I've been watching the news, and we're gonna reopen, and this will get me by, and that's all the help I need with is just to get the loan. And right, so maybe they're coming back now. And like, okay, great, I get the loan, it's gone. Now what do I do?
So, to take us out here, do you have any guess as to when this latest surge of virus will recede? We've talked about it in the past a bit, and it's funny because like July was like one of our estimates, and it hasn't even peaked here in Arizona yet. It's supposedly going to peak mid-July. Is it because people are in these hot states, right? And you have to be indoors more, and versus New York and back east where they had their spike before was in the winter when they were all indoors. Is that the reason for the difference in the spikes, or is it, hey, New York and those places are down now because they got over this major spike? Like you almost have to get up and over that hump. I don't know at this point. I just know that I'm done. I'm starting to fall into that bucket of, does this make a lot of sense anymore? Yeah. Well, I think the thing that's really challenging for both of us is we have kids at home. I have a 5-year-old. You've got a bunch of like preteens and teens, right? So and the reality rough. Of our kids not going back to school is here now. I think for the rest of the country, it is still 8 to 12 weeks out before school starts, right? They're in their summer. A lot of schools just started summer vacation 2 weeks ago. We're 5 weeks out, 4 weeks out from school, and it already got delayed. And now it's got delayed into that, like, until we deem it safe, which could be 2 years. Right. There's just no knowing when this is going to stop. And kids are suffering. Like, not going to school is damaging children. There was a great op-ed in the New York Times about this. It's a blogger who wrote this, who works at home, and her husband lost his job, and they're both at home with their son and are trying to imagine a fall in which school doesn't open. They're in New York City. And New York City is one of those places that has said that the schools aren't going to open until it's safe. And it's challenging because it's creating an environment in which you can't work and have kids. You can't open the economy and not have daycare and not have school, right? It doesn't work. My wife and I are in that situation. We both work. We like working. One of us could afford, now that we're in Arizona, to not work, but we don't want to. And we're kind of being forced into that situation potentially in the fall. It's either that or we have to find somebody who can provide daycare or a place that can provide it, right? Basically, in COVID times, you have to choose, do you have a job or do you take care of your kids? Yeah. Because it's very hard to do both. You can't be half-assed both. And the worst part is, unfortunately, the option's starting to become, I have to be a half-assed teacher to my kids because there's no option. They can't go to school. There's no option on the table. I found it. It's called In the COVID-19 Economy, You Can Have a Kid or a Job. You Can't Have Both. New York Times, July 2nd, by Deb Perlman. Imagine if you actually were an accountant as well and you had to tax deadlines. Okay. It's hard enough just doing my normal job. Like, I can't imagine being on, tax deadline and having kids at home and having to deal with all that. You and I, David, like we're relatively speaking very well off compared to most people in this country. And I think most accountants, most CPAs, most EAs, like, hey, we're professionals. We're going to be okay. Let's say I'm a cop and I've got to go to work, and what do I do with my kids? I got to have daycare. I guess there's actually daycares for the essential people. Those are open.
Yes, but did you know what the observation of those daycare centers are?
What?
The kids aren't getting sick. They're not getting sick. They're not dying. And so we have to figure out what this balance is. And I'm going to say it on the podcast. I'll say it, right? All right. I'm starting to wonder what's worse for kids. Them having a worst, horrible year of lack of education for a year of their life, or possibly losing their grandparents. Like, what's worse? Because that's basically where we're at. It's very clear the data it skews much higher to old people. Right. That are age 55, 65, 75, and it gets worse. Like every decade older, right. the death rates are way higher. What are we balancing out? The long-term impact to the youth of America or the youth of the world?
I had to make a choice pretty early on in this whole thing about what were we going to do with my son. He's 5 years old and he is deaf and has cochlear implants. So this is a critical point in his development where he needs to be talking with other kids so that he can learn language and catch up, because he's behind, right? He didn't get these when he was born. He had to wait a year. So he's already behind. He needs to be with other kids, talking to them, listening to them, interacting with them. And so we moved from California to Arizona specifically because we knew that even if the public schools wouldn't be open in Arizona, that the political climate is such that at least private schools would be open or daycares would be open, which we have been able to find. And those are closed to, non-essential folks in California. So we would have had to, one of us quit our job and the other one, work and then try to homeschool him. But it's just terrible for him to be at home. Like, it's going to create, if you have these kids home for longer than, a year without interacting with other kids, it's going to really stunt their development. And then the online education is just atrocious. It doesn't work for young kids. Like, it's hard enough for adults. It's not effective.
I think this lockdown stuff and kids not going to school, like, this is the next 4 weeks is going to be really interesting because the unemployment, that extra $600 is going away.
Yeah.
So all of a sudden people who are maybe staying at home because maybe the unemployment was there, and maybe it's not as stressful, right? You have that money coming in, you're able to pay your rent, but what happens? Like, that money goes away. Now you can't pay your rent. You're stuck at home with your kids. And like, there's just all these stresses, right? Like, I think people are starting to get stressed out from this, and there's going to have to be a swing here in the pendulum somewhere. I don't know what it is, but and maybe the real fear is just the hospitals and the volume. And like, we have to, if somebody's in a car accident, now there's no beds for them. And like, I kind of get these things, but I also, at some level, like, this is getting, I have the guy down the street. He's like 90 years old, lives by himself, super independent, and literally like has the strongest handshake of any person I've ever shook hands with my whole entire life. But I was talking to him yesterday morning, and he said he hasn't touched a human being in 90 days. Like, that's not healthy mentally for people either. No, so I don't know. I don't have the answers, but it feels like, for me personally, I'm burning out, like, on this. Like, I'm kind of like over it.
Yeah, we need to figure out what the end game is of this, because locking down forever is not a solution. And the cat's out of the bag, right? This infection has spread so much in this country that we can't stop it. I heard somebody saying that in order to get rid of it in Arizona at this point, we'd have to shut down for months. This is not going to happen. There's no way. It's impossible. So do we live with it? Is that what ends up happening? We can mitigate it, right? As much as we can. Wear masks, right? Masks work. If we all wear masks and we go back to school and work, then hopefully that works. I mean, you look at other countries like Japan and Korea, that's what they're doing. It's working.
And they had masks kind of from day one.
Yeah. Right? Yeah, exactly. So it can be done. Unfortunately, we've just got this like totally screwed up system where this has all become really political. So I don't know. I hope we can fix it. I feel you, David. I'm burned out on this too, and I think everybody is. If you're feeling burned out, like, and you're listening to this, you are not alone.
Give us a call. We'd love to hear what your take is. And I want to, obviously we just spent 8 minutes not talking about anything accounting related, but it is related, right? Because we're all of us, like it or not, are going through the same journey.
Yeah.
Like this is not unique to you and I.
No.
Like we're all dealing with this COVID thing. And it's, we're now 16, 17, 18 weeks in, 20 weeks in. I mean, and basically we still have half this year to go. 2020, half the year to go still.
And I think basically all accountants are going through the same thing right now, which is trying to work from home with everybody at home, with your kids at home, trying to homeschool them while you're at home. Even if you have a spouse that does it, it's being distracted because you're at home while they're at home. Not everybody gets to have an office. And even if you do have a home office, the kids come barging in, right? That's the big thing. And I think we're all going through that.
And in the stress of not separating work from home, which is very, very hard right now.
Very hard. Yeah.
There's no division of you can't turn off. And
so if you want to talk to us about that, if you want to vent or just tell us what you think or tell us we're wrong or agree with us, leave us a message. We have a number set up. You can call it 202-695-1040. That is 202-695-1040. Call us, leave a voicemail. We'll listen and maybe we'll even play it on the air.
Even better idea. Tell your kids to call. So that way you can at least get like an extra 3-4 minutes of, getting some work done while they're calling us instead, leaving us prank jokes or something. That could be kind of funny. I did see something that I really loved. I do not know who on Twitter this was from. It was something about, hey, my 5-year plan is just getting through 2020. And I thought that is perfectly said in just a beautiful, perfect way right now.
Well, David, stay safe, stay sane until the next time we talk.
Absolutely.
Take care.
Bye. Time for the classifieds. Still sending spreadsheets of unclassified expenses to clients? With Client Hub, automate this process and get client answers instantly. Client Hub is a client communication platform that helps you consolidate client communication, securely share files, and instantly get answers and much, much more. Get started today with a free trial at clienthub.app and enter promo code CAP25 for 25% off your first 3 months. Client Hub, frictionless client communication. Smansha integrates with QuickBooks Online and Xero to help put an end to cash flow problems. By using daily, weekly, and monthly forecasts, cash flow calendars, and powerful customized what-if scenarios, you can visualize your clients' finances in clear and intuitive ways so you can take action and reshape their cash flow by getting them the funding with one simple application. It identifies when extra cash is needed and can match your clients with multiple financing options via more than 50 screen lenders, and you can advise on the best offers suited to your clients' needs. Head over to cloudaccountingpodcast.promo/Smansha. That is cloudaccountingpodcast.promo/SMANSHA.